Now let us discuss about types of commission in consignment business. So theoretically, there are three types of commission given in consignment business. Why I am emphasizing on the word theoretically? Because in practical life, commission is something which can be mutually decided by the consignor and consignee. There can be n number of ways of calculating the same. But here in chapter, they have given three different type of commission, which are number one, ordinary commission. Number two, Dell credit commission, and number three, overriding commission. Now let us discuss all these three commission one by one in detail, starting with the first one, ordinary commission. Now ordinary commission is also known as general commission, normal commission, or sometimes nominal commission. How it is calculated? So there can be two different ways of calculating this commission. Number one, either consignor may offer a fixed percentage on sales, like consignor may offer 3% on units sold, 5% on units sold, like that. Or consignor may offer a fixed amount per unit sold, like rupees 100 per unit, rupees 100 per box, or rupees 100 per meter, rupees 100 per liter, etc. The unit can be anything, right? Now, one more thing that we have to focus over here is how this commission is calculated, or rather say on what value it is to be calculated. So here, commission is to be calculated on total sales. There can be cash sales, there can be credit sales, but when you are calculating this ordinary commission, it should be calculated on total sales. The next thing that we have to focus here is whenever you are calculating commission, it should be calculated on units sold by consignee and not units sent to consignee. Why it is to be calculated on units sold? Because commission is an incentive given for units sold and not for units sent. If consignee is holding some units unsold with him, he is not doing anything, and for that we should not give any sort of commission. Now let us understand this particular commission with a small example, that Mr. A has sent 400 units costing rupees 100 each to Mr. B. Mr. B sold 150 units at 120 for cash and 100 units at 150 on credit. Now what if Mr. B is entitled to get 10% commission on sales, or what if he is supposed to get rupees 10 per unit sold? So we have considered here both the type of conditions, right? What if this option is there? What if other option is there? Now, if we focus on first option, 10% on sales. Now, if I say 10% on sales, it has to be on value, sales value. So here I have to calculate first total sales. So 150 units into 120 rupees and 100 units into 150 units. So 18,000 plus 15,000. My total sales is 33,000. Correct. Now, for commission one, or under option number one, if I calculate commission, it will be 10% on 33,000 rupees, which is 3,300 rupees. Second type of commission is based on number of units sold. So we have sold 150 units as well as 100 units. So total we have sold 250 units. So 250 units into 10 rupees. So my commission is what? 2,500. Don't you think it's very easy? Let us discuss the next type of commission. Do you remember which was the next type of commission? It was Dell credit commission. Now, for what purpose this commission is given? We are already giving ordinary commission. Now, why this type of commission? Mind well, this commission is given over and above ordinary commission. Number one. Second thing, if you have focused in the previous example, we have checked that Mr. B has sold goods for cash as well as credit, right? So if goods sold for cash, then there is no problem. But if goods are sold for credit, there's always a risk of bad debt. Now, if consignor wants to protect himself from the loss of bad debt, if he don't want to bear this particular loss, he gives that additional commission to consignee. That is known as Dell credit commission. And as I have told you, that it is calculated over and above normal commission, or you can say general commission. Now, one thing that we have to check over here, or rather say, you have to remember, that is, if nothing is given in question, then Dell creditor commission should be applied on the total sales value. Total sales value it should be applied and not on credit sales. Yes, logically it may seem that bad debt is associated with credit sales only, but if nothing is given in question, then it should be applied on total sales. And it is always advisable to give a note for same. What if in question they tell you that Dell creditor commission is 3% on credit sales? Then there is no problem, we have to apply on credit sales. But if nothing is given, then that 3% should be applied on total sales. Now, what will happen if this commission is given? Obviously, once this commission is given, consignor is securing full payment. He'll be rest assured that he is not going to lose anything, or rather to say, we can put in other words that he is securing what? The risk of bad debt. Now, let us discuss the situation and who will bear this particular loss. The entire concept we are going to summarize in two lines. Number one, if Dell creditor commission is given, it's allowed, then tell me who will bear this particular loss of bad debt? Obviously, consignee is going to bear this particular loss. But what if Dell creditor commission is not allowed? Then obviously it has to be borne by consignor. I hope you are able to grasp the concept. Right. Now, ready for the next concept? Can I see a little bit of excitement on your face? Yes? Yes, you are excited, right? Now, let us discuss the third commission, that is overriding commission. Now, why this commission is given? The purpose of giving this commission is to increase the sales. Now, you may wonder that the entire consignment business is done to increase the sales. Yes, but this is a special type of commission. First of all, it is given over and above the other two commissions, if any. Right. Now, how the main purpose of giving this commission is to increase the sales. Now, we may wonder why increase in sale. See, consignor may specify some selling price, right? Either overall for a particular period or maybe per unit. Like consignor may specify that you have to sell this particular unit at 1000 per unit minimum. But what if consignee is able to click sales over and above 1000 rupees? Then obviously consignor's profit is going to increase. For that particular reason, as an extra incentive, consignor gives this commission to consignee. Or consignor may set a particular target that if in a given period, if your sales is up to 10 lakh, I will give you this to commission only. But if it is over and above 10 lakh rupees or any XYZ amount, then consignee will be given some extra amount, right? So there is nothing but overriding commission. This will actually give boost to consignor's sales. Correct. Now, here are my Chinku Pinku. Yes, Chinku Pinku, tell me what you're saying. What? Can you please solve few practical problems on this? Why not my Chinku Pinku? It is becoming very interesting. Thank you so much. Now let us discuss the question. Now this question, I can say this can be a master question. Here we are going to incorporate different types of commission and different types of situation. So let us first deal with the question and read the question first. Janak of Bangalore sent out 2,500 units of goods costing rupees 1,000 each to Babu of Calcutta. The goods were to be sold as to yield a gross profit of 20% on sales. Mr. Babu sold 150 units at 1420 per unit on credit and 75 units at the rate 1,400 each for cash. Now calculate the commission due to Mr. Babu in each of the following alternative cases. So this is my master problem, and now different cases will be given. Here Mr. Janak is a consignor who is sending the goods. Here Mr. Babu is consignee who will be selling goods on behalf of consignor, and he is acting as an agent. Here Janak has sent 2,500 units, but that will be irrelevant for my calculation for commission, because commission is never calculated on units sent, but it is to be calculated on unit sold, or you can say total sales value. The goods were to be sold as to give profit of 20% on sales. Now 20% on sales, this denotes the specified selling price. Consignor is specifying a price that you should sell at this particular price. We are going to discuss this in depth, but when that's better, the type of commission or the type of case will come. Now, here he has sold goods for cash as well as on credit. Now, let us discuss what is the first case over here. Case 1. If Mr. Babu is entitled to a commission of rupees 50 per unit. Fine. Now, let us discuss this particular case. Here they have not given which type of commission it is. If nothing is given, it is to be treated as an ordinary commission. 50 per unit. Again, they have not specified 50 per unit what? Per unit sold, per unit sent, for cash, credit. So we know very well it is to be calculated on what? 50 rupees per unit sold. Clear? So let us discuss the solution for this one. Commission will be 150 units plus 75 units. Right? We have sold 2 units, 2 type. Multiply by 50 rupees. So 225 into 50 rupees. So that will give me rupees 11,250. Easy. Let us discuss case B. If Mr. Babu is entitled to an ordinary commission of 5%. Good. Now here, in this particular case, they have clearly given ordinary commission. So there is no confusion about it. But again, they have given here 5%. Now 5% I should apply it on what? I should apply it on total sales. I should apply it on total sales. So first of all, here we need to calculate total sales. So it is nothing but cash as well as credit sales. This particular line, what I'm writing over here, is just for your reference. In exam, if you want, you can write it. Otherwise, you can skip this and you can directly start with the calculation. Cash sales, 75 units, 1400. So that will give me rupees 1,05,000 cash sales. Credit sales, 150 units at the rate 1420. So that will give me rupees 2,13,000. So my total sales will be 1,05,000 plus 2,13,000. That is 3,18,000 rupees. So if I calculate commission, it will be 3,18,000 into 5%. That will give me rupees 15,900. Now let us move forward towards the next case. Case C. If Mr. Babu is entitled to an ordinary commission of 5% and Dell credit commission of 2%. Good. Now here we have added one more commission, Dell credit commission 2%. But whether it is given on what value it should be calculated, which sales it should be calculated, no. Then it should be calculated on total sales. So this note, if you write in your exam, it is preferable. So if we start with the solution, I'll write first note. So in that notes, note number 1, this you can write in your exam. For Dell credit commission, nothing is specified, so we will calculate it on total sales. Next, if you focus over here, 5% ordinary commission should be calculated on what? Total sales? Yes. 2% Dell credit commission should be calculated on what? Total sales? Yes. So if you don't want to calculate 5% and 2% separately, you can merge it and you can calculate directly 7% because the base is same. Base is same. Your sales, total sales. Clear? Just to give you an example, let us say if 100 rupee is the income and I am supposed to get 10% of 100 rupee as ordinary commission and 5% of 100 rupees as delta commission. So if I multiply 10%, 10 rupees, 5%, 5 rupee, or I can simply multiply 15%. So this second note I have given just for your reference. No need to write in exam, right? As ordinary commission and delta commission both are on total sales. Instead of calculating it separately, 5% and 2%, we can directly calculate 7%. So here I have calculated 7% directly, but if you wish, you can calculate 2% and 5% separately. So commission will be 3,18,000 into 7%. That is 22,260. So let us discuss next case. Case D. If Mr. Babu is entitled to to an ordinary commission of 5% and Dell credit commission of 2% on credit sales. Now, if you check this particular case, it is similar to the previous one with a minor difference. Last three words were not there in the previous case, but now I have included here the three words on credit sales. Now you cannot multiply directly 5% and 2% to total sales, because the 5% is to be calculated on the base of total sales, whereas Dell credit commission is to be calculated at the base of credit sales, right? So let us discuss the solution for this one. Ordinary commission will be 3,18,000 into 5%, which we had already calculated, 15,900, and Dell credit commission will be 2,13,000 into 2%, which is 4,260 rupees. Therefore, my total commission will be 15,900 plus 4,260. That is nothing but 20,160. Clear? Let us discuss next case. If Mr. Babu is entitled to an ordinary commission of 5%, Dell credit commission of 2%, and an overriding commission of 25% on any surplus price above the specified selling price. Now, first two, there is no problem. Commission 5% and 2%, we can merge and we can directly calculate 7%. Now, here we have introduced the last type of commission, which is overriding commission. Overriding commission is 25% on surplus selling price above the specified selling price. So here what are items I need in order to calculate overriding commission? First of all, I need to calculate the specified selling price, right, of total units sold. That I have to compare with the total sales, and whatever excess amount, right, whatever excess amount we have, on that we will calculate this overriding commission. So for the solution we have to write few notes. Let us start with that. First one, before we solve this problem, we need to find the specified selling price. Now, how we find specified selling price? If you remember that particular line given in that particular paragraph, second line, if you forgot, I'll write it for you right now. What was that line? The goods were to be sold as to yield a gross profit of 20% on sales. Now, what do you mean by 20% on sales? 20% on sales, it is nothing but 25% on cost. It's same. Why? Assume a scenario where if I am selling goods for rupees 100, and if I tell you that I am earning 20 rupees profit, which is nothing but 20% of 100 rupees, correct? Now, if out of 100, 20 rupee is my profit, then what about that 80 rupees? It is nothing but cost. Can I say on cost of 80 rupees, I am earning profit of 20? Yes, and this 20 is nothing but 1/4 of 80 rupees, or to put in other way, it is nothing but 25%. So we will apply that 25% on cost, right, per unit. So this is very important. The price should give 20% profit on selling price, which is nothing but 25 on cost. Clear? So specified selling price per unit will be 1000 plus 25%. Why I am calculating per unit? Because they have given number of units and price per unit. So first of all, I will calculate that what consignor was intended to sell this particular product, and now my specified selling price per unit is 1250. Let us calculate specified selling price of units sold. So 225 units into 1250. Whether I have sold goods for cash or credit, total sales 225 units into 1250. So the specified selling price was 2,81,250. Now surplus price above specified selling price, that is actual sales minus sales at specified selling price. Now 2,81,250 was the price at what? At which consignee should have sold it. But consignee has actually sold these units at what value? 3,18,000. So we need to calculate how much extra amount he has realized. That is rupees 36,750. So that 25% should be applied on 36,750. Clear? Now, ordinary plus Dell creditor commission will be 3,18,000 into 7%. If you remember, same type of calculation we have done earlier. So that is nothing but rupees 22,260. And my overriding commission will be 36,750 into 20%, which is 9187.5. So my total commission includes ordinary commission, Dell creditor commission, and overriding commission. So therefore my total commission will be 22,260 plus 9187.5, which will give me the final figure of rupees 31,447.5. I hope you are enjoying and able to understand. Let us move further. If Mr. Babu is entitled to an ordinary commission of rupees 50 per unit, Dell creditor commission of 22% and overriding commission of 25% on any surplus realized above specified selling price. Okay, so the previous question and this question, right, it's same to same. In previous case it was 5% commission ordinary and Dell credit 2% and this overriding commission same to same. So the only change is in ordinary commission. So we won't waste much time in this. Let us discuss solution for this. Ordinary commission 150 plus 75, same calculation, multiply by 50. So it is rupees 11,250. Clear? Dell creditor commission, again we know it should be on 3,18,000 into 2%. So which is nothing but rupees 6360. Overriding commission, we have already calculated it, 36,750 into 25%. So rupees 9187.5. So my total commission will be 11,250 plus 6360 plus 9187.5, which is 26,797.5. Clear? Let us discuss the next and the final case. This I have seen many students they find it difficult. So let us focus on it. If Mr. Babu is entitled to an ordinary commission of rupees 50 per unit plus 1/5 of gross sale proceeds less total commission thereon exceeded a sum calculated at specified selling price. Now, this is a bit difficult. First case, let us discuss the first one, ordinary commission. We have already calculated this 225 units sold multiply 50 per units. So there we don't have any problem. So I'll just write 11,250. Clear? But the next commission, or which is nothing but overriding commission, for that there is a problem now. Right? Now if we discuss overriding commission, just we write the same line what they have given, 1/5 of gross sales proceeds less total commission thereon exceeded a sum calculated at specified selling price. Okay, so now 1/5 of gross sales proceeds, whatever we have sold, 3,18,000 less total commission. It means in order to calculate overriding commission, I am supposed to deduct total commission, which is nothing but ordinary plus overriding commission. Now, how it is possible that in order to calculate overriding commission, I need to deduct overriding commission? Bit confusing, right? Are you finding it difficult? Let us make it more simple. Let us assume my total commission as variable X. So therefore, my overriding commission will be total commission less ordinary commission. Why so? Because my total commission consists of two commission components. Number one, ordinary commission, and second one is overriding commission. Clear? So if I deduct ordinary commission out of total commission, that will give me what? Overriding commission. Therefore, overriding commission will be X minus 11,250. This is my result number 1. Why X minus 11,250? Again, I am repeating. If your total commission is, say for example, 12,000 rupees. So this 12,000 includes ordinary commission of 11,250. That means the remaining 750 has to be overriding commission. Now let us focus on the condition what they have given in that particular question, and let us try to write the same condition in an equation form. That will give us more better picture. Clear? So overriding commission is 1/5 into bracket gross sales exceeded total commission, so minus total commission exceeded specified selling price. Clear? So here 1/5. What is gross sales? 3,18,000. Total commission is X, and specified selling price of goods sold. How many units we have sold? 225. And what is the specified selling price per unit? 1250. So if I simplify it, it is 3,18,000 minus X minus 2,81,250. So it's 1/5 36,000 minus X. So if I multiply this 1/5, that is nothing but 20% to this particular value. So it is 7350 minus 0.2x. This is my solution number 2. Now if I compare 1 and 2 both, then it is x minus 11,250 is equal to 7350 minus 0.2 x. Why? Because overriding commission x minus 11,250, this is overriding commission. 7350 minus 0.2 x, even this is also an overriding commission. That's why this should be equal. Now if I simplify 0.2, if I put on other side and 11,250 on other side, then it will be x plus 0.2x and 7350 plus 11,250. That will give me 1.2x is equal to 18,600. So I can say x is equal to 18,600 divided by 1.2. So my total commission will be 15,500. Clear? I hope you have understood this, and it was very easy. Now let us move towards the next concept and next question. Hope you have understood this well. Now let us discuss about the journal entry in respect of bad debts in the books of Consignment. Now, bad debt, whether we will pass entry or not, it depends upon the condition that whether consignor is giving Del creditor commission or not. If consignor is allowing Del creditor commission, then it is no more an expenditure for consignor. But if he is not giving Del creditor commission to consignee, then this particular loss he has to bear. So here there will be two conditions. One, if Del creditor commission is allowed, and second one is if Del creditor commission is not allowed. If it is allowed, obviously it is no more an expenditure for consignor. He is least bothered whether consignee is having actual bad debt or not. So obviously there will not be any entry. But if consignor is not giving Del creditor commission to consignee, then this loss has to be borne by him, and he will recover less amount from consignee. So the journal entry will be consignment account debit because it's a loss, and to consignee.